Hi and welcome to this Blueberry Markets video update with me, John Kibler, Head Currency Analyst. In this video, we're going to go over Euro US dollar, the key support and resistance areas to watch, and also a key trading pattern to identify the next impulse phase. So, looking at Euro US dollar, we talked about in the Forex market outlook this week that 1.2 was the resistance level where we expected some sellers to come back into the market, and then back down at around about 1.1940 was the support level for Euro US dollar, where we would expect the 4-hour trend to continue from. And that's what we had nicely play out here. The market rallied up into that 1.2 level, rejected, came all the way back down into 1.1940. Again, saw a nice reversal setup here. The market rallies to the upside. So as the trend continues, we want to be looking to buy from those previous structure points. As price approaches this level, we look for those key trading patterns. So first of all, what we want to do is, if we want to buy the market, we need to ask ourselves, where is that going to be bought from? Previous structure highs. So if we can change this 1.2 into a support level, and I'm just going to grab a rectangle box and identify the high of the candlestick down to the opens and closes of the previous area. This is a great area to look for buyers to step back into the market, because previously the market has found some sellers. So typically when the market does that, we usually see a pushback down for the market to retest these structure points, and then the market continues the trend, very much like down here. We can see that the market rallied to the upside, it pulled back into those structure highs, it rallies. Market pulls back into structure highs, it rallies. So we're looking for this trend to continue, especially as we looked at the seasonality report of the US dollar, suggesting that the market will continue to be bearish until the end of December, start of January. So we're looking for that continuation. So buying from 1.2 makes sense, as it is that previous structure, as we said. Now, one key pattern you can look for when price enters these positions are what we call change of cycles. Now, typically when we look at trading in the markets, we have trends within trends. So if the 4-hour, this pink line in here, is our uptrend, then typically within that we would see a trend on the lower time frame. So the green will be representing the 15-minute time frame. Now at the turning point, so let's say the market is in a nice impulse phase and the market starts retracing back, typically we would see the 15-minute create a slight downtrend in that moment. Then what we're looking for, in line with trend, is the 15-minute trend to become bullish again, and that comes in with a change in cycle. And these are typically found when we see patterns like the double bottom pattern or the inverse head and shoulders pattern, things like that. But what we want to do is we want to get involved in the market when we see these patterns forming. So if we go down to and just highlight a couple of these actions that we've seen recently. So if I highlight this retracement phase here, if I just turn that into a nice red, and then if we grab the other sort of retracement phase in there, looking for the market to pull back, and if I grab the current one that we're seeing here at the moment, and then what I'm going to do is just place a line on the impulse phases. I'm just going to highlight that with a purple line, and again going to highlight this next impulse phase through here, and where I expect the impulse to come through, again just through there. So what we're looking for at these points are those turning patterns, and what I'd like to do is just go down into that 15-minute time frame, just show you how the change in trend forms. So we can see here, we'll just go back a little bit, back down into our first change in cycle area. When the market starts forming a bearish downtrend, we can see, let me just change that color back 1 second. We can see that the market is pushing to the downside through here. We're getting the market making lower lows and lower highs, showing us that the market is in that 4-hour retracement phase. As soon as we break out of that and we start making higher highs through here, the market then starts impulsing on the 4-hour time frame, causing this uptrend on the 15-minute time frame. Next, we can see the retracement phase begins. The market comes into an area of resistance. We get a double top pattern. The market breaks lower. We then make a new lower low. The market then comes back up, changes cycle. This is our area where we can say, let's start buying the market. Great risk reward ratio here. Market rallies up. Now we're starting to get that downtrend situation forming. This is highlighting to us that the market is now in a retracement phase. Now we can trade this one or two ways. We can trade the retracements, or we can wait and trade for the trends. Now the trends give you the larger impulses, the trend moves give you those larger impulses, which means you have a higher probability of a trade outcome in your favor, and you have a higher risk reward ratio. Okay, whereas counter trend moves can be very shallow depending on the strength of the trend. However, if we're expecting to buy from 1.2 and we've seen that the market has broken and made new lower lows, we could look for the market to continue to do that. So if we make a new low here around about 1.2040, we could look to short on a pullback into and down towards this 1.2 level. When price gets to that support point, then we can look for the change in cycle patterns again on the 15-minute to get involved with a opportunity long in line with the higher time frame trend. Okay, so I'm gonna leave it there. Hope you enjoyed the video update, and I'll speak to you soon.